You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen. His website is thegoldenoilguy.com. Welcome to the show, Chris.
Hey, thanks for having me, Jim. Pleasure to be here.
An interesting question asked online. Crude prices are about the lowest we've seen in months. Is this the bottom, or could they go lower?
From the looks of it, I think crude oil prices are going to continue to grind lower here for a little bit. We continue to see the dollar hold up. We see zero interest in buying in crude oil. There's just energy stocks are being sold off at a ridiculous rate. They're picking up speed. The way the chart pattern for crude oil is looking, it looks as though we're going to poke to new multi-year lows. And there's a great potential that, we go all the way down to the $35, $36 per barrel level before this kind of landslide here stops. So I got a feeling that we're going to see lower prices for the next couple months, and it's going to be pretty volatile, pretty choppy down here, and we're probably going to see that 30, somewhere in the high 30s get tagged for price.
Can Canadian producers still make money at that level?
It's a real struggle for most North American places to be able to make money with crude oil at that price. Really, it's the overseas guys that can make a killing because they can get out of the ground for $8-12 per barrel, and this is just not really feasible for the small companies in North America to get it out of the ground.
And of course, we're told that in Canada, oil makes up 10% of the economy. That's not good news for the governments who are expecting royalties and taxes from it.
Yeah, this is definitely wreaking havoc on the Canadian economy and even the Canadian dollar. You look at the Canadian dollar related to the U.S. Dollar, our loonie moves almost hand in hand with the price of crude oil. And of course, this is really hurting, the companies. It makes it so expensive to buy, to import things. And it's just really difficult for the companies across the board.
Would this encourage Canadian manufacturing if we can't afford to import? Maybe we'll have to make our own.
Well, exactly. I think it's going to start keeping companies here or bringing them back because it is. I saw the rate jump. It's $1.31.5 exchange with the Canadian dollar. So we got to pay $1.31 for one U.S. greenback. So, it is a huge change from what we've seen a couple of years ago when, it was inverse direction. We're talking almost a 40% change in currency value in the last about 4 years. So it is wreaking havoc on a ton of companies. And, it's going to be more affordable to use Canadian, factories, run everything here.
Now, of course, governments haven't done much to encourage that in recent years, have they?
No, they haven't. There's really no help to Canadian companies in general.
Taking a look at what's happening in China, they've now taken measures to protect the Shanghai stock market by curbing short sales. Is that a good move?
I think it's a great move. The whole short selling where people can profit from making money from falling prices and from driving prices down, I don't think that's fair on a whole bunch of different levels. Of course, the big banks, institutions, the people who pull the strings for the financial system, they all want that. They all love short selling. But in reality, companies get listed on exchanges so they can build share price, build value for investors. Investors want to buy stocks because they're buying into companies they believe in and that are going to show growth in earnings, and the share price should go up. Yet these exchanges and countries allow the short selling to come in and for people to make large amounts of money driving the prices down and profiting from it. And I just don't see how that is fair for companies and investors when, the exchanges allow you to do this. It just doesn't make any sense for me. It's not ethical in my opinion. Maybe banning shorting is a little extreme, but at least bring back the uptick rule, which means there used to be the uptick rule. For those who don't know what that is you can't just hit the sell button and sell short and drive the price of the market down. You have to put an order out there, wait. You have to wait for the market to be bought up so that you can sell into the buying pressure. Of course, they removed that rule, so now when there's fear in the market, we see these flash crashes. We just see nonstop, selling and selling pressure, and it drives prices straight down. But if you put that uptick rule back in place, it will at least reduce some of that those strong waves of selling and getting rid of short selling in general. That is really the best solution for long-term growth of the stock market and to give trust back to the investors, knowing that these big banks aren't completely pulling the wool over their eyes and shorting into these stocks, driving prices down to favor the banks and not the investor.
Well, when the last recession hit, Germany banned short selling, and the German stock market perhaps has been the strongest in Europe over the last 5-6 years.
It makes good sense. If you can't drive the prices down, then they should naturally have an upward bias. So, yeah.
We'll have more with Chris Vermeulen right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking to Chris Vermeulen. His website is thegoldandOilGuy.com. Well, speaking of gold, do you think some interesting plays could happen? And we're basing it all on history.
Yeah, the gold chart, if we were to zoom way back in time to 1974 to 1976, there was a big bear market in gold. We saw gold go from around $195 an ounce and fell all the way down to almost $100 an ounce. Big bear market, lasted about a year and a half. And if we were to overlay that chart on top of the recent bear market we've been in gold now, that we saw gold top out in 2011, and all the price action we've had up till today, if we were to overlay those charts, both those chart patterns, the tops, the sell-offs, the consolidation we've been in here for gold for a while, they're almost identical. And I've had technical analysis using Fibonacci circles and extensions and a lot of different cycle analysis put into the market, into gold. And I've had this done for several months, and I have a major cycle low on gold showing that we could reach down to the $830 an ounce, and that'll be sometime in September, late September, early October. We could see those lows in gold. And of course, the historical correction we saw in 1975-76 points to pretty much that exact same sell-off happening again in the same amount of time frame. So it looks as though everything's lining up for a big washout drop in gold and silver, which a lot of people are going to definitely give up on the metals. I know everyone is sick and tired of everyone calling the bottom in gold and silver and gold stocks. They've just completely given up on the sector. And this is going to be the last. If we get this big washout low, I think it'll be great. Obviously, if you're not in the gold market, it's great. But this is what we need. It's going to flush the market out. Everybody is going to completely shut their books, close their positions, give up all hope on the sector. And that is exactly what you need for a new bear market to start. Once all the selling and all those holders are gone, then there's nothing left but people who have accumulated at a nice low price, that are comfortable with their positions. And we're going to see a huge rally after that to go test the 1900 high in gold that we saw back in 2011. It'll be a V-shaped bottom, more or less. We'll see a massive rally, and it'll just muscle its way up. And it'll probably all coincide with something big happening in the economy, with a country or currency or something. Usually these events kind of happen, overlay onto each other at these major turning points.
And of course, to major holders in gold, we saw this happen, I think, 3 or 4 weeks ago, where there was a $2 billion sell-off, and that brought the price down sharply. So if a major holder like China, for example, decides to do a big sell-off, they could buy back that gold relatively cheaply.
Well, exactly. Yeah. I think there's going to be a great opportunity to get into gold, silver, and miners here in the next couple months. We're right on the cusp of a major drop. We're talking, we're going to see a or maybe almost $300 drop in gold, and that's going to happen in the next couple of weeks, I think. So that's going to be the opportunity. It's going to happen fairly quickly, and you got to be on the gun, get ready to accumulate some positions during those spike lows. But I think there's going to be some huge opportunity. Both for, if you wanted to, you could short the market, you could profit from the drop, and when it starts to happen, you can start to cover, and then you can get long. So you can play both sides of it depending how aggressive you are.
And what's this going to do for silver?
Silver will follow suit. Obviously, silver is a little more leverage. It's a thinner traded market, and it'll move percentage-wise much more. I think we've got the downside kind of cycle and target around the $11 per ounce, or 10.90 per ounce is what I have, and it was currently trading at 14.50. So we're going to see quite a big hair drop or haircut in both gold and silver. And the miners right now, if you look at the bullish percent index for gold miners, which is an index that tells you how many gold stocks have bullish patterns, 0 have bullish patterns right now. Every gold stock in the index is trading in a bear market, has bearish patterns, and there is no sign of life. And usually we're going to see this indicator stay down here for a little while before it starts to move back up. And it just goes to show there's zero sentiment in this market, zero bullish sentiment. Everybody's slowly giving up, and I think we're about to see that washout capitulation low that is going to set the stage for another bull market. But there's going to be some serious blood in the streets before that happens.
Chris, thank you very much for chatting with us.
Hey, thanks for having me, Jim. Appreciate it.
My guest has been Chris Vermeulen. His website is thegoldandoilguy.com. You're listening to HowStreet.com Radio. Our popular YouTube channel is Talk Digital Network. Find us on Twitter at Talk Digital Net. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.